All markets are intercorrelated and interconnected. What happens inside one market influences all markets. In the past 24 hours, inside the crypto market, the AI tokens did really well. In major crypto news, the SEC is giving up on classifying Ethereum as a security. This has very big ramifications for the crypto market. ETH, the number 2 in the crypto market, ranked by market capitalization, has an entire ecosystem that underpins decentralized finance and so many other things. With this specific case over, it is big news. The SEC has lost. We're going to go through the cheat sheet and I'll explain that there's a lot of moving parts in the economic system and I'll put them all together throughout this video. Make sure you watch to the end. You're going to find it really valuable. Let's run the numbers. As a community, we focus on the cheat sheet because it gives us so much insight into what's happening. The cheat sheets are done literally all around the world, and this one was done by someone you know as CTKS Ambassador, who released this analysis on Twitter/X. Really good work. And Alpha Harbinger has also been doing some really good work with the cheat sheet as well. Inside the service, if you go to 000, you'll see that there's a video in there, CTKSMethod cheat sheet, how to fill it out. Inside that video are the PC versions and the Keynote version or the Mac version of the source code. If you're inside the service, you can actually update this particular area here and just insert your name when you do your analysis and just post it on social media. Let's look into the latest and breaking news. In the crypto space, the Ethereum win, a major crypto win as the SEC drops the investigation into Ethereum. Keep your eyes on the Ethereum-based tokens such as ENS, Lido, Aave, Pepe, and Ondo. And of course, Ethereum and Ethereum Classic. Van Eck just recently produced a report where they're saying that they believe that Ethereum by 2030 is going to hit $22,000, and they're suggesting that their clients allocate 6% of their funds in a 60-40 split between Bitcoin and ETH. We're seeing some really interesting behavior inside the crypto space. Bitcoin went down and it has a little bit of negative momentum, but we've seen the max pain today from Bitcoin also go down. But the max pain for Ethereum has been revised upwards, and BNB and also XRP. Another thing to pay particular note of, these are weekend liquidations, and we're seeing something pretty much like Saturday and Sunday liquidations inside the crypto market. Now, what was that due to? Because of the US bank holiday. That's why you've seen all sectors remain as they were. We're noticing some really interesting behavior with Forex. It's very important to look at Forex. It'll give you an edge inside all financial markets. The DXY and dollar-yen combo have been coming down, and it's not surprising we've got inversion on the euro dollar and the Aussie dollar. What's really particularly interesting here is the Aussie dollar is coming up into some very steep structural resistance. It's just starting to consolidate underneath that, but it's gone to the positive price path. This is good. This is exactly what we want to see. Also, when we look at the euro dollar, we can see it has positive momentum at the current time. A slight amount of structural overhead resistance, but it's registering positive on today, or when this cheat sheet was done. Some things to keep your eye on. Gold and silver are currently just consolidating, but they could be looking at breakouts. Now, if that's the case, that's something that you want to keep your eye on. Also, the Russell is just weakening currently, but the S&P 500 has done quite well. And this is, of course, from a couple of days ago, but it just keeps your eyes on things. Apple is encountering structural overhead resistance. That's why it would back off. And it has a degree of negative momentum at the current time. Tesla has also backed off its structural resistance. This is why it's so important to look at where structural resistance and support levels actually are. We're seeing Bitcoin and crypto go a little bit more neutral, and you can see there's been some good movements up in quite a few of these crypto projects. One thing to just bear in mind, MicroStrategy is under some very, very solid structural resistance levels at the current time. It's just backing off that structure. Over the next couple of days, we would expect Ethereum, because of this Ethereum win, this is really, really huge news for crypto. We would expect ETH and the alts to start coming up. That may not happen instantaneously, but over time, we would expect that. It's a fantastic news. Just to bear in mind, when the US market opens up, we've got a number of key economic data points coming out. Now, building permits and the Philly Fed Manufacturing Index and housing starts are all expected to strengthen. Unemployment claims expected to weaken. Just keep your eyes on how the market interrelates to that. And when we look at the greatest gainers and greatest losers inside the crypto market, we can see there's a very definite AI stance just coming out here at the moment, as well as an ETH stance as well. And yesterday, we saw the greatest gainers were stablecoins. Now they're the worst performers today. This means that there was a broad-based rally across crypto, and that was seen in all of this upward price momentum. In fact, a lot of cryptos came down into structural support and bounced like Super Balls. When it comes to liquidations, on the 24th, there's $6.58 billion worth of derivatives in the Bitcoin market at a max pain of 55,000. ETH has $3.58 billion at a max pain of 3,100. These are pretty big numbers. So it's something that you're going to want to keep your eyes on. You'll hear a lot of news channels talking about, well, crypto and Bitcoin can do pretty well if there's a follow-through action in the major indices. By looking at the cheat sheet, you can put all the jigsaw puzzles together, and typically this row 1, is incredibly important. If row 1 is witnessing negative momentum, we expect row 2 to be going positive or consolidating, and that's what we're seeing right now. This is a very favorable sign. This means in the next couple of days, it doesn't mean instantaneously, but in the next couple of days, we would expect that positive momentum would hit the crypto market. But always be aware of your three-dimensional strategies. When looking at the futures, typically what occurs with Bitcoin, and Bitcoin is this blue line, when the major market indices come up, we expect that Bitcoin will also come up, and that will draw all of crypto with it. We've seen a bit of a divergence recently, but with the SEC moving away from trying to sue the hell out of Ethereum and the ETH ecosystem, this is bigger than big news. Also, we're starting to see positive signs. We're seeing that the Russell is improving. This is quite good because the Russell is not a bad indicator of where Bitcoin and crypto could be going. It's a really good idea if you keep your eyes on the global stock market indices all around the world. Recently, the Russian President Vladimir Putin visited North Korea and gave Kim Jong-un a big hug. And how did the markets respond? Not well. We can also see that Taiwan stock market is going gangbusters on the AI craze. And quite seriously, the AI craze is not that crazy. It's a reconceptualization of all the world's infrastructure. It has legs. Let's have a quick look at the major indices. We can see around this 55.06 level, we have structural overhead resistance. What that specifically means is that as the S&P 500 comes up, if it doesn't flip this into support, and there was a lot of flipping comments in yesterday's video, to understand how something flips is a really good idea, because if it comes back and confirms as support, it can go forward. If it doesn't actually do that, if it gets weaker, it will go down to lower structural levels. Some of these structural levels could be a little bit hard to see on your monitor, but when you have the particular indicator that comes out of the service, you'll see it very, very easily. But for right now, this is the structural level that's actually suppressing the S&P 500 as it's going up. With Level 1 and Level 2 standard certification, we draw up CTKS method paths or CTKS paths. We go in terms of 3 dimensions, and it's always based on structural interactions between forecasted price, and you can see right at the current time that the Nasdaq is taking the positive price path at the moment. This is very important to track how these things are going across time, because if you're tracking the negative price path, you're probably going negative in towards the end of the month. But right now, we're going on the positive path. A lot of people expect a market crash, but as Peter Lynch always said, more money has been lost by investors and traders anticipating crashes than has ever been lost by investors and traders actually in crashes. So what we actually want to do is just to observe price in its natural habitat, see how it's actually going. We're price trackers. We know that the Dow Jones has been weakening, so when we look at the positive price path, we can see it couldn't maintain that upward momentum, and it got pulled down by a higher dollar and higher yields. But things are starting to turn around. We may see, if the dollar and the yields keep on falling, a rally in the Dow. But just remember, when it passes from one price path to another, we should pay particular note. When looking at the Russell 2000 and just comparing what's happening with the price paths, we can see that it's been following pretty much to a ping the negative price path. Now, these price paths are drawn out at the start of the month and they're never altered. What we can see is it's starting to gain strength. This is a really good thing, because if the Russell starts to even come back to its consolidation path, that is likely to put upward pressure on crypto prices. And with the SEC dropping the case against consensus and against ETH, this is just fantastic news. In the last bull market run, we saw yields and Bitcoin moving together pretty much in lockstep. We may see this turnaround occur, so even if yields increase, we may find that it's all part of a strengthening economy. And we can already see that gold is starting to turn around. I believe Bitcoin is not too far behind it. And masterclass students refer to TM6 to get this particular chart. What crypto does is all going to be dependent on Bitcoin. Now, what are these particular levels? They're just the levels that I've marked in from the indicator. Let's pop that on. We can see over the past 30 days, Bitcoin has actually come down about 8.1%, and it's following the negative price path at the current time. Now, what occurred in the past 24 hours? We saw that there was structural support at 64,168, and we pretty much bounced from there. Now, where did we bounce to? 65,322. We couldn't confirm this as support. We got a failure here on this particular area, and then another failure. And what we're seeing is potentially the first part of a cut over. Now, if this occurs, it could well come back and challenge the 35,322 mark, reconfirm it, and come up to the 66,117. There is a lot of positive news about Ethereum, but everything comes down to structural overhead resistance when you're thinking about positive price momentum. So we really need to look at Ethereum's chart from a structural perspective. We can see Ethereum over the past 30 days has come down 3.31%, so that's not too bad. Now, what happened with ETH? It hit this 35.64 structural level and it's flatlined. This is exactly why we need to know where the structure is. If it gains upward momentum and reconfirms, the next area is this 36.47, and that's quite strong structure there. If we don't get confirmation at that 35.64, we could be well headed back to 34.86. But these safety nets exist inside the market. And with the indicator or with your learning from the CTKS method, you can get these lines yourself. Personally, I believe a lot of people have gone very ultra bearish on crypto at the current time. Because crypto has been coming down for a number of days, they expect it just to go down forever. So they'll do increasing numbers of short positions, and when the shorts get liquidated, they have to cover by buying. Shorts sell first and then buy back later, and longs buy first and then sell when price goes up. When shorts get liquidated, that can put a lot of positive price momentum. It's really negative for the shorts, but it's good for the market. It drives the price upwards. But if there are too many longs inside the market, the shorts just whack them around. With the SEC case being settled, and especially with Van Eck just saying that you need to allocate 40% at least to Ethereum, well, this is a game changer. Mass adoption is coming, and you are so very, very early. Ethereum is currently $35.63. Let's have a quick look on the price paths for Solana. What we saw was Solana was going fairly neutral at the start of the month. Now it's coming down to around a negative price path. We saw this when when it came out with the approval of the ETH spot ETF. We saw Ethereum just rallying and Solana dumping, so you must be aware of this if you're a Solana holder. But of course, the thing is, if ETH isn't a security, Solana can't be a security. And that could mean some very good buying and investing opportunities ahead for Solana. For the month, Doge is currently down 27.4%, but we're expecting on a structural level a bit of a bounce from here. The CTKS method is the world's most powerful smart money buy and sell level detection system. Now, how can we prove that out? Well, we do it every day, but I'll show you on ADA. Let's just pop on the indicator. When you're investing and trading, one of the most important things that you can do is to know where the structural support is underneath price if it's coming down, because you would expect a technical bounce from there. If it doesn't reconfirm as support, it's going down to lower structural support levels. And price is just moving in a way between structural support and structural resistance levels. Literally, as many in the community have said, it's a license to print money if you know where these structural levels are. And we can see right now that ADA has come down 22.55% in the past 30 days. For example, if you didn't have the CTKS method, you wouldn't know where the structural support and structural resistance levels actually were. You would just use recent indicative price or any number of other indicators. Being a former lecturer in statistics, both first and second year, what I can tell you is the CTKS method is the world's most statistically significant support and resistance identification system globally. Now, when you use the actual method, what you're doing is you're not looking backwards, you're looking forwards. Now, I'll just pop on the indicator again to show you how you can use it. For example, as if you were just here as price is printing this one, you would expect that you would get a technical bounce around this level. If it doesn't confirm as support, you know that you're in trouble. You're going to come down to lower structural levels, this being a very good one, which should hold price quite well. This can literally make you a fortune. And it doesn't matter what chart you're looking at, the concepts always hold the same. If you're getting a negative fresh air gap underneath a structural level, the sellers are just too powerful. They're pushing price down. But where are they pushing it down to? They're pushing it down to structural support levels. And of course, not all structure is created equal. Some are stronger, some are weaker. But all are important. It literally doesn't matter what you're looking at. Here, gold is marked up through nearly 70,000 days worth of data with the CTKS method. What you could have been looking at as gold was selling down, like these big red candles, pretend you can't see to the right. You can only see this candle, current. And what does that mean? You've got all of this negative momentum coming into gold. Most people would say, oh, this is just going to continue and continue. Well, it's only going to continue if there's not a structural level here. And what about this huge movement down in gold? Well, it always depends on where the structural levels are. What you will find, and you can do the structural levels yourself, I just do the indicators for you because it saves you a lot of time. If we turn that indicator on, what you can see is there was very strong structural support levels when price was coming down around this 23.41 and lower at the 23.26 mark. We went up, we broke through these levels, but we had an absolute mass of structural support under here. So if we lost these two levels, this was a really good buy zone. Now, what does it mean right now? This chart is on a daily basis. What it means is that we have to get through this 23.41 level. We've got a degree of structural support at the current time, and it does look constructive, but we must get through this particular level in order to guarantee bullish price momentum. In other words, we have to flip that level from resistance into support. And you can see on this particular candle, look how it came up, whacked it, and then got retraced all the way down to here. Just amazing. Let's have a quick look at Tesla. What you can see here is Tesla, currently 184.94, has a tremendous amount of structural overhead resistance. You can see in this particular chart, that's a massive amount of selling activity that will occur at these smart money levels. That exactly is the cause of Tesla coming up into this area and getting pushed down, coming back into it, trying to strengthen up because the major indices have been doing really, really well. But if it can't just keep on going, it's going to come back to around this 174 level. But at least with the indicator, you know what's going on. Otherwise, you're pretty much guessing. Well, what about EMAs? Well, let's pop on that indicator. This is also available inside the service. You can see that the indicator does give you a bit of a concept on where support could actually eventuate, but the real support is down here. What about the resistance? What does the EMA tell us about any resistance levels above? Absolutely nothing. And this is what you really need to know. If you're an investor and you're buying into resistance, that could give you quite a headache. Let's cross across to Nvidia, the largest stock in the US market, which is up 94.82% in the last 30 days. Well done. And what are we seeing here? That 138 level is giving Nvidia a bit of a headache. And when we look at the 200, 100, 50, 26, and 12 EMAs, what is it actually showing us? Well, the 12 EMA is saying, well, we've got this level of support around that 124, but the real levels of structural support are around 118. But in between there are some levels of structural support also available inside the market. Before the CTKS method, it went pretty much like this. You've got an indicator like this, like an EMA. The problem with exponential price action is that it's really hard to put an indicator on it like this of only one line because you don't know where support and resistance levels are. You only know one of them. For example, we're seeing that Nvidia is just going gangbusters, but the EMA is not offering us any assistance whatsoever because it's not telling us where the ceilings are, where the sellers are hanging out. This is really dangerous to your portfolio if at least you know you can do something about it, you can pre-plan. But Nvidia has gone up to new all-time highs. It's in price discovery. It's going to the moon. Yeah, no, it doesn't work that way, and it never has. What would you know? Do you have a finance degree? Yes, I do. This is actually my discipline. Price discovery is a retail concept. From an institutional perspective and being inside financial markets for nearly 4 decades, I can tell you it doesn't exist. Price discovery is meant to just draw in the retail crowd, but institutional investors and traders always know that there's resistance inside markets. It can get lighter, absolutely, but it's always there. Because you've watched to this point, you're an absolute legend. You're taking time to invest in your future, and I really respect that. What we can see here, and I want to show you something really cool. You notice that date, Tuesday the 18th of June. Notice the next day, Thursday, not Wednesday, Thursday the 20th of June. In between here and here is a banking holiday. This is how you can tell if the stock markets are closed. But if you were doing your cheat sheet, or following my cheat sheet inside the market, you would see here, US bank holiday Wednesday AU time, and that has now passed. That's why I've grayed it out. If you're interested in learning how all of these charts intercorrelate and interconnect, you can go across to cryptotechnicalanalysis.org. If you would like to do the certification on how to do the levels and how to better understand all of this, you can go to CTKSMethod.org. Or if you would like all the indicators, I mean all of them, they're available at CTKSMethod.org. And there's a free cheat sheet there as well, but the source code is inside the service. I'd like to wrap some things together for you. If we're seeing a continuation of weakness, dollar weakness, and euro and Aussie dollar strength, that will throw positive price momentum into junk. Now that's good for the major indices, especially as we can see that the Russell may be turning around at the current time. We understand why Tesla is having such a headache, because it's got all of that overhead structural resistance. It's just slowing its momentum. You can see that you would actually want to look at the charts and the cheat sheet all together. What I believe is because there was a US bank holiday, and that's just now passed, the markets will reopen again. When they do, when they get all of this news on the absolute smashing loss that the SEC has suffered, it's going to pull a lot of funds into Bitcoin total crypto market cap and all the ETHs. This will be sufficient. If you're looking at the chart for MicroStrategy, it's under a whack of structural resistance, just like Tesla. The other thing to note is that the Bitcoin ETFs have been very, very negative over the past week or so. This could likely reverse very, very quickly. And also, we're getting a lot of economic data out, which has got strengthening as the base case for those economic data releases. You can see there's so much value given by this cheat sheet. So much data is in one place, and it's literally a one-page view across all markets, from the Forex market to the commodities markets, to the major markets, to the top stocks, and of course the crypto market as well. Another thing that you might like to keep in mind, total crypto market cap is stuck between a range, and when the main markets open, if we get those Bitcoin ETF inflows and all of the positivity around the SEC failing, the SEC has suppressed crypto prices for years. We could see some absolutely explosive moves, but don't buy into the narratives, buy into the structure. That's what's going to save you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.